Good morning and welcome to our Ashworth Wealth weekly market update. My name is Scott Thomas. I had a couple of thoughts I wanted to share with you this week and a chart that I thought was very interesting. I would imagine if you went around in January of 2024 and asked most economists how the dollar would fare against other currencies around the world, the general consensus was the dollar would continue to weaken this year against other major currencies. And that was mainly because of our fiscal and trade deficits and narrowing interest rates. That was kind of the general consensus. What's interesting is now we're halfway through the year. That has not been the case. I wanted to kind of share that with you, show you a chart, and kind of give you some reasons why. The chart I wanted to share with you is the DXY chart and how the dollar has done against other currencies around the world. Um, the dollar has actually gained, if you take an average across the board against other currencies, the dollar has actually gained about 4.4% against other currencies around the world. And as you can see, the Japanese yen was the biggest. We gained the most against them. The yen has depreciated about 13% versus the dollar this year. The euro was about 3.4%. So the reasons for that, even the most economists felt it was going to be just the opposite. A couple of reasons. Number one, our resilient growth, the growth that we've had that was not anticipated, or we're growing at a faster pace than was anticipated. Slower progress on inflation, and U.S. pushback rate cuts. And I'm going to talk about that here in just a minute as well. But I thought it was interesting that the dollar has continued to be, it has been for the last 50 or 60, 70 years, has been the safe haven currency, and it has continued to be that way. Now, there are things that we're continuing to watch, and we will continue to monitor that situation. But as of right now, the US dollar continues to be the safe haven currency around the world. A couple of things I wanted to share with you, though, talking about our current situation. I went back and did a little bit of research here. Obviously, we've got the presidential debate this week. I'm sure this is going to come up, interest rates and where things are at and what the cause of those are. But I just wanted to kind of share with you where we're at, where we have been, and where we think we're going with interest rates, hikes, cuts, all that kind of stuff. So as of right now, the latest number that we have is our economy still has an inflation rate of 3.27%. Yeah, that's down just a little bit. Last month it came in at 3.36%. But it's interesting to note since February of 2020, we're actually up about 20.8%. So it is trending in the right direction, but we're still way, way higher than we were back in 2020. Prices are, obviously 20 to 25% higher. So what is forecast? If we continue on the trend that we're on right now, this year, 2024, as a year, should come in at about 3.1. That's what's forecast as of right now. The Fed's target, however, is at about 2%. And the target right now, and the projections are right now, if things continue on the path that they're on, that we'll hit that 2% target sometime in 2025. At least that is the hope. And that is the way that the Fed is managing the money supply, is to try and get to that 2% rate. But just as a means of comparison, over the last couple of years, at this time in 2023, our inflation rate was 4.06. In 2022, our inflation rate was 9.59. So we are making progress, but we're not quite back to where we would like to be, and hopefully we're going in that direction. Okay, so what is coming with the Fed? The Fed meets again July 25th and 26th. It is not anticipated that we'll have a rate cut then, but it looks like if the economy continues to go the way it is right now, the general feeling on the street is we'll have one rate cut by the end of the year. So that's kind of a general snapshot of kind of where we're at right now. And I just wanted to say thank you. We actually had some good questions that came in this week off of presentations we've done over the last couple of weeks. We welcome those. We're grateful that you're watching. If you have any questions, concerns, please let us know. You can email us and let us know if there's anything that we can address in any future market updates. Thank you. Have a good week, and we'll talk to you later.